Coming up, Trump says he has no plans to talk to President Xi this week. He also says he wants a fair deal with China, but China is ripping us off. And this morning we got some economic data with the services PMI data coming in better than expected, showing some upbeat expectations for forward-looking indicators of the economy. Taking a look at stocks this morning, you can see stocks are rebounding, but still red on the day when we take a look at the S&P, NASDAQ, the Dow Jones, and the Russell at the time of recording. And gold is ripping once more. We'll talk about that in just a second. Bitcoin down a bit, oil lower, and the dollar index still chopping around. And as we get started with this video, if you could do me a big favor and make sure to hit the thumbs up button and subscribe if you're new to the channel, let's talk about some trading setups that are happening now. So starting us out here, we'll take a look at the S&P 500, which looking at a daily chart, we can see that we are coming up pretty close to that 200-day moving average, which I discussed in my Sunday analysis video. As we get closer to that key area, we also notice that the 200-day previously acted as a level of resistance and sold off. So the question is, as we approach that level, will we see a similar reaction from price, and could that signal some short-term bearishness coming back into the market? But when we drop down to the 4-hour chart, the chart looks a lot stronger. What we can see here is that a series of higher lows have taken place in the S&P 500 and in the NASDAQ. And as we break out of this downward trend line that we've been struggling with for several months, this is a good indication, or a good omen in my opinion, that perhaps the worst of the trade fears are behind us. That being said, as we started out today's video, Trump and President Xi are still kind of head to head. I do think that there is some deals that are likely to happen between the US and China, but perhaps it will take some time, and in between, the market may be volatile. Switching over to the NASDAQ, I'm watching this level here very clearly, this level of resistance around 20,400, and personally would be interested in longs if we see a breakout above this level and a pullback into that region, or a pullback down to that 19,200 level. Both of these could potentially be trade setups that I'm interested in. We can see that several of the US indices, including the Dow Jones, the Russell, the NASDAQ, and the S&P 500 are getting bullish readings within the EdgeFinder's score setup, within the EdgeFinder's top setups scoring mechanism. What our tool does is it scans sentiment data, technical data, and economic data to get a general directional bias on your favorite charts, including indices, commodities, and currencies. And so I'm watching the NASDAQ really close, as well as the Dow Jones, as they test these critical levels to see how price action reacts. I have a bullish bias. I'm just waiting for the proper setup to enter the market. So this week, if we get a couple days of retesting that key area, I may look for an opportunity to get long, and my plan would be to shoot for a return back to those all-time highs. The alternative strategy, as I mentioned, would be if we see a key breakout above that 20,000 level, what I'd be looking for would be a retracement opportunity, identifying where we could put a stop loss as below key structure or support at the time. So let's say we get something like this, right? Then what I'd look for is to probably put my stop loss below that level, but of course I'll have to reevaluate if this setup becomes relevant. And while we've had a good stretch, I do still think that the path of least resistance for this market is to continue moving higher. So I see retests of key levels of structure as possible opportunities to join this move even further than I already have. As many of you guys know, I've got several stock positions open. And here's a list of several of the stocks that I currently have open in my portfolio. You'll see that I lean pretty heavy on the tech side with companies like Nvidia, Robinhood, Amazon, Apple, Google, Meta, Fortinet, Uber, and a collection of other ones as well. And while I built those longer term positions as the market continued to fall, I am still looking for an opportunity to add a NASDAQ short-term trade to the mix if we get a return back into some key levels like I just discussed. And the Dow Jones is showing some relative strength here. Take a look at the gain here today of 0%, and I say that of course jokingly, but we're flat on the day. Meanwhile, the NASDAQ and S&P 500 are down. This shows some relative outperformance from the Dow Jones. And in my opinion, this chart looks really clean. You've had a breakout of this key level of resistance, this downward trend line, and if we get some move like this, I do also like the idea of potentially getting long the Dow, as this one is getting a really strong reading within the EdgeFinder, which we just discussed as a top setup within the algorithm here. And while the indices are top of mind for me, I do also want to discuss what we've been seeing in gold, which has been losing a little bit of that bullish score. Let's take a look at the price action and see what's going on. So gold is clearly having a very good day, pushing up off of this 50% retracement, but I'm not in the trade, and I personally don't have a reason to be in the trade at this time. Now, as you guys know, when it comes to the EdgeFinder's top setups algorithm, if you're familiar with the channel, you know that this is not a holy grail of like when to buy and sell the market. I wish there's something like that out there that would make this all easy for us, but this is simply a filter system. It looks at a collection of data points and it says, hey, are things generally bullish or bearish? And when I get something like a neutral reading, most of the time that means I'm not going to take any trades on it because there's mixed sentiment, right? The sentiment is not a clear, objective, one-sided thing. And we saw some good services PMI data that we discussed at the top of the stream, which actually took more score off of the gold reading. Remember that gold typically thrives on uncertainty in the economy and geopolitically. And recently we've seen some deals between the US and Ukraine, which is a positive thing there. And that's actually acted to push the price of gold lower. But today specifically, why is gold up? Well, gold is trading higher as the dollar weakens ahead of Wednesday's US interest rate decision. And the bond market is pricing in a 96% chance that the Fed will not cut rates this week. But you never know, maybe that 4% chance that they do cut rates comes into play. Looking out to the June meeting, there's still a strong probability that we do not see a rate cut during that time, according to the bond market, but an increased chance that we could potentially see a cut during that time as well. It's really not until July where you see the first rate cut is actually probable compared to the idea of holding rates. So the bond market still thinks that the rate cuts are coming. It just may take some time. And this slowing pace of rate cuts, meaning they're going to come, but they may be a little bit slower, is perceived as a negative thing for gold because that would mean the dollar may hold up a little bit stronger. But that being said, dollar is down here today a bit. So we'll have to keep an eye on that. We'll take a look at that in just a second. But remember that for gold bulls, right, rate cuts happening faster generally are perceived as bullish, and rate cuts happening slower are perceived as bearish. And the contrary, or to add on to that, if you actually have rate cuts or rate hikes coming into the picture, that is very bearish for gold. So right now we do still expect rate cuts to occur. They just may occur at a slower pace, which to me makes a little bit more of a bear case in the short term for gold prices. And so if this thing continues to rip higher based on technicals, which I think is very possible, you know, hey, that's awesome. But for me personally, I need a combination of technicals, fundamentals, and sentiment to align properly within my top setups algorithm in order to take the trades that I take. And I'm not telling you that if you have a reason to be bullish or bearish gold that you can't be. I'm just telling you what I do, and what I've done for years now is stay systematic to what I've built within the EdgeFinder. Turning our attention here to the US dollar, you can still see that we are in a pretty clear downtrend. Take a look at the moving averages and you can see pretty much everything is pointing towards more downside to the US dollar. In fact, this blue moving average, which is the 20 moving average, has acted as a pretty reliable indication of short-term weakness. You can see we've rejected it multiple times in a row. Each time price has gone near that area, we've seen some selling pressure. So will we potentially see some continuation of that theme as we've retested it here recently? Momentum still seems to favor the sellers here, but I would not be surprised if we do come up just a little bit more to test that 38.2% retracement level, which by the way has pretty big significance because when we look left, you can see that over here, this was a huge level of support for the bulls and could potentially be now acting as resistance for sellers after we've broken and closed underneath it pretty decisively. 3 years ago, we launched the EdgeFinder. We brought it to the public. Currently, we're celebrating our 3-year anniversary sale, which is the biggest discount that we do all year long on the product. If you don't already have a copy of the EdgeFinder and you'd like to be using it the way I do each day to help potentially spot opportunities and to build a more decisive trade plan around what you're doing, incorporating fundamentals and sentiment analysis into your analysis is something that many traders are missing. So if you don't have a copy of the EdgeFinder, this is the biggest discount that we do all year long. You can currently get 40% off. And for viewers of my channel, if you use the first link in the description down below and chat directly with our support team, we'll get you an additional 5% off for a limited time. Like I said, this is the lowest price all year long before it goes back to its usual price. It's a one-time payment to get access. And again, don't miss the sale before it ends. So taking a look at some currency trades, I'm currently long the euro dollar around current levels, and I do have plans to potentially add into this trade if we see a larger pullback within the context of this recent strength we've seen in the European region. So I have a long trade here. I'm looking for a pushback up to these levels to take profits, and if we move lower, I'm going to look to add or dollar cost average into my euro dollar long idea. Taking a look at the pound US dollar, I'm watching this 50% retracement level for possible interesting areas of 1.31 or so. I do really like the pound against the US dollar specifically. This is one of my top favorites for possible long setups going forward. The Kiwi dollar is also another interesting one. If we can see a larger retracement down to this 5,800 level, I'll watch for some entries there. And the Australian dollar has now decisively broken out of this area. If we see a retest into this area here, I'm definitely interested in some longs as well. In fact, we can change this from red to green. Another interesting item on the list is the Kiwi against the Japanese yen, as well as the NZD CHF. Let's take a look at these two currency pairs. So NZD JPY seems to be trying to break out here. You can see this downward trend line and key level of resistance may now be acting as potential support. So we'll continue to watch that. I would like to see at least like a push, then a pullback before this, because again, right now it seems like we're still just kind of sitting at resistance. So if we can decisively break out and pull back, that would be an interesting setup for me personally. And a very similar chart when we take a look at NZD CHF, which is sitting very close to a level of resistance. And I'd be interested if we can see something like this, a clear breakout of this resistance zone, a pullback into that area, and then looking for long side continuations. Let's take a look at two Australian dollar currency pairs as well, Aussie yen and Aussie CAD. Very similar chart here for the Australian dollar against the Japanese yen. You can see we are testing a key level of resistance in the form of this downward trend line. If we get some more decisive price action here and a pullback into a level of support, that may be interesting. And before we take a look at the Australian dollar against the Canadian dollar, let me just remind you what these scores are actually telling you. It's telling you that when comparing the Australian economy versus the Canadian economy, or the New Zealand economy against the US economy, right now economic reports are coming in upbeat for the New Zealand dollar compared to expectations, and potentially downbeat, or they have been downbeat for the US economy. So adding in that layer of fundamental analysis is something that I find very important to adding clarity to why I'm taking particular trades. When it comes to Australian dollar against the Canadian dollar, I really don't love this chart as it seems pretty far away from having any sort of key breakout. I would really only be interested in this chart if it had some sort of decisive move above this level of resistance here, then possibly looking for pullbacks. Today's video is sponsored by Maven. If you're looking to get funded, consider checking them out as they offer some of the best discounted prices in the industry. In fact, they offer instant funding for as little as $19. They have some of the best prices in the industry, and they have lightning fast payouts. I saw on their website that usually payouts are done within 1 hour. So if you'd like to check them out to see if they're a fit for you in your trading, consider doing so using the link in the description down below. I do also want to leave you with the idea that if you are looking to get funded, make sure that you are at a point in your trading where you truly are ready for it. Many traders jump the gun on this. They try and get funded too soon. So while Maven does have some great options and some prices, I think it's the most responsible thing to do to make sure that you are in a good place with your trading before you get funded. And I think they have that same message in mind based on what they have on their website. Dollar cost averaging is absolutely controversial for a good reason, because people who abuse dollar cost averaging blow accounts like no other. But if you have really, really slow and steady conservative approaches to dollar cost averaging, it can be a very, very consistent way to approach the FX market, especially since FX tends to do this over the long term. Dollar cost averaging can be really good. Again, you can mess it up though, because you might say, oh, I'm going to short right here, but you short really heavy. And then this move, even though you ultimately were right, you might blow up big time before the market kind of resurges back the other direction. Another currency pair that I've been watching, I think Alan is in the chat today. We were talking about euro pound at one point. We need Ivan for a stock market rally. Alan, I agree. We need him. We need him right here. So, what's up? What's up, Ivan? Hey, we missed May the 4th, right? May the 4th be with you. That was yesterday. So euro pound, I think it was a bearish setup. It still is. Yeah, so bearish setup on euro pound. This is an interesting one for me. I'm a little cautious on this one simply because we just tagged the 618 retracement. I would like this one to, on a longer term basis, like take a look at the weekly chart. When it comes to FX, I'm way more like long term focused. Not really looking to like scalp intraday or anything like that when it comes to Forex. So anyways, had this huge rejection at this area, kind of missed that area. But if we do go back and retest that region, I'm going to probably look for sells up in this area of resistance, a long-term level of resistance with small size. As always, I wanted to get some advice on how to advance and become profitable to provide for my family. So if you're not yet profitable, this is the news that you don't want to hear, but you probably need to hear. You should get a job. You should absolutely not be trying to trade for a living or to provide for your family when you're not yet profitable and you are just out of school, you should use your career or use your degree, get yourself some work, build up capital, trade on the side, and don't rush the process. That's my opinion, right? If you try and jump into just trading and you don't have a lot of capital and you're just getting started, and you're trying to provide for your family, trading's not it. A job will provide for your family for now. Once you have significant capital built up, trading could potentially eventually provide for your family, but it's a long-term goal to be able to trade for a living, and doing it right out of school is not something I personally recommend. Yeah, I would say increase, just like what I said to Croaxer, right? Increase your income, deposit to your trading accounts, scale it up, learn stuff. Don't rush the process. Loris says they've been trading for less than 1 year. Primary goal right now is to become a funded trader. I'm in this 2 weeks. I missed 3 really good trades, one on gold, S&P, and one on the Kiwi dollar. Instead, I tried to chase 2 of them and eventually lost money, risking 0.5% of my account on each one. If I did everything right, I would have been almost up 3 to 4%. How do I stop this mistake? Right. So at the end of the day, you can map out a trade perfectly. You can have the greatest setup possible and it still can result in losing money. So your risk size, I would say, is great. 0.5%. Most traders who are new are like risking 5% per trade and they don't realize they're making a silly mistake. So 0.5%, I'd say you're doing a great job there. In terms of your system, I would make sure that you really backtest what you're doing. Make sure that you have a rule set. And before every trade, do your checklist. Does this trade meet this criteria, this criteria, this criteria? Is my risk meeting this criteria, this criteria, this criteria? Then execute, and understand that no matter how well you map out a trade, mistakes are going to happen, losses are going to happen, losing streaks are going to happen, winning streaks are going to happen. Okay, so just something to think about. Bethel's been trading for 1 to 3 years. They do not yet own any A1 software, but considering it in the future. Their goal right now is to find a profitable trading strategy. And their trading related question is, what is the easiest way to trade trend lines or read trend lines? So trend lines are challenging because they're subjective as anything, right? I could draw a trend line like this, right? The next person could draw a trend line differently. Let's say that the next person trades using the very extreme levels and they get this trend line. Or the next person comes in and they trade only the candle bodies, in which case, you know, you have a trend line here, then you have another trend line here. So trend lines, while useful in my opinion, they're not useless products. They are subjective and people draw them differently. And there is not a quote unquote right or wrong way to draw trend lines. People draw them differently and have various levels of success and failure. So trend lines are a simple tool to add to your analysis. They are not, in my opinion, the end all be all for trading, strategies. Now, I'm not saying that they can't be useful or that you can't incorporate them into what you're doing. You absolutely can. Just something to think about. Last question here from Rosemary's been trading for 3+ years. Primary goal right now is to find a profitable trading strategy. They do own some of our stuff, which is awesome. And they ask, when are you always live? So great question. So you can always find out when the A1 Trading Show is live by going to a1trading.com. Once you go to our website, you can bookmark our website, explore all the free stuff that we have. We have free courses available, etc. But this one right here, this A1 live stream in the top right hand of your screen, click that. And you can always check in on when we're going to be live and who is going to be live.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.